Welcome back. I am your financial navigator, and today we are discussing very interesting topic. We're going to uncover the secret to multiplying your money and growing rich. It's a financial phenomenon that has changed countless lives, the power of compound interest. We live in a world where financial stability and wealth creation are highly sought after goals. But how can we achieve them? Well, my friends, the answer lies in a simple concept that has the potential to transform your financial future: compound interest. So, what exactly is compound interest? Well, think of it as the supercharger for your money. It's a magical force that can turn a humble sum into a fortune over time. Whether you're saving for retirement, a dream vacation, or even starting your own business, compound interest is the secret ingredient to make your financial goals a reality. It is actually the interest you earn on your initial investment, as well as the interest you earn on the interest that has already accumulated. It's like a snowball rolling down a hill, gathering more and more momentum as it goes. Imagine you invest $1,000 with an annual interest rate of 5%. In the first year, you'll earn $50 in interest, bringing your total to $1,050. Now here's where it gets exciting. In the second year, that 5% interest is applied not only to your initial investment but also to the $50 you earned in the first year. So, you'll earn $52.50, and your total will become $1,102.50. The snowball effect has begun. Now, here's the real magic. Over time, compound interest continues to work its wonders. The longer you keep your money invested, the more significant the impact. It's like a financial time machine, turning small contributions into substantial sums. Compound interest has the power to accelerate your wealth growth exponentially. But wait, it gets even better. There are various investment vehicles that can help you harness the power of compound interest. From stocks and bonds to mutual funds and retirement accounts, there's a wide range of options available to suit your financial goals and risk tolerance. Let's talk about some of the best investment options, where you can put your money so you can take advantage from the compound interest. There are lower risk investments like certificates of deposit, high-yield savings accounts, and also bonds and bond funds. The higher risk investments would be dividend stocks and real estate investment trusts. We are going to explain each of the mentioned above category so you can choose what fits best for you. Low risk investment number 1, certificates of deposit. If you're a beginning investor and want to start taking advantage of compound interest right away with as little risk as possible, savings vehicles such as CDs and savings accounts are the way to go. CDs are instruments issued by banks that require a minimum deposit and pay you interest at regular intervals. The money is tied up until the term of the CD reaches maturity, unless you pay an early withdrawal penalty, but will typically pay a higher interest rate than a regular savings account. CDs from online institutions and credit unions tend to pay the highest rates. The term of a CD varies, most often ranging from 3 months to 5 years. Once the CD matures, you will have full access to your money. If you need the money sooner, you can select a shorter-term CD to give you a little more interest than if it was just sitting in a checking account. Low-risk investment number 2, high-yield savings accounts. High-yield savings accounts usually require no minimum balance, or a very low one, and pay a higher rate of interest than a typical savings account. With increasing interest rates and inflation, money sitting in a non-interest-bearing account is money lost. One of the primary advantages to high-yield savings accounts is that you accrue interest while still having the safety and insurance, up to $250,000 per account, of a traditional savings account. Unlike most traditional savings accounts, though, you might need to maintain certain minimum balances in order to receive the advertised interest rate. So you will need to make sure you are selecting an account within limitations you're comfortable with. While both CDs and high-yield savings accounts will typically pay more than having your money sit in a traditional savings account, they will have a hard time keeping up with inflation. In order to stay ahead of surging prices, an investor would likely need to consider more aggressive options. Low-risk investment number 3, bonds and bond funds. Bonds are usually seen as a good compounding investment. They are essentially loans one gives to a creditor, whether that's a company or government entity. That entity or company then agrees to give a specified yield in return for the investor buying the debt. Keep in mind that you will need to reinvest the interest paid on a bond in order to compound the interest. Bond funds can achieve compound interest too, but would need to be set to automatically reinvest the interest. Bonds will have varying levels of risk. Long-term corporate bonds are riskier but offer higher yields, whereas U.S. Treasury securities are considered to be among the safest investments you can make, as they are backed by the full faith and credit of the U.S. government. Bonds can be beneficial to an investor who wants to hold the investment long-term, but can be riskier compared to CDs and high-yield savings accounts. That's because the price of bonds can fluctuate during their lifetime. As prevailing interest rates increase, existing fixed-rate bonds can decrease in price. On the other hand, if rates fall, the price of the bond will rise. Regardless of what happens in the interim, when the bond matures, it will return its face value to investors. Here comes my favorite part where we are talking about little bit riskier investments but the returns are much more attractive. Investments that can compound your money a little faster. High-risk investment number 1, dividend stocks. While long-term equities on their own are also a good investment to compound growth, dividend stocks are even better. Dividend stocks are a 1-2 punch, as the underlying asset can keep increasing in value while paying out dividends, and this investment can earn compound growth if the payouts are reinvested. If you're looking for dividend income, you may want to look to the group of stocks known as the dividend aristocrats. This group of S&P 500 companies have increased dividends per share for at least 25 consecutive years. Some companies on this list include Coca-Cola, Walmart, and IBM. So, for a first-time investor looking to potentially outpace inflation while compounding income long-term, dividend stocks and dividend aristocrats are a good way to go. Keep in mind, these companies also tend to be more stable and less volatile, so they may not offer as much potential for outsized returns like the top growth stocks would. High-risk investment number 2, real estate investment trusts. They are a great way to diversify your portfolio by investing in real estate without having to buy the property outright. They also pay out at least 90% of their taxable income to their shareholders in the form of dividends each year. As they do with other dividend stocks, investors must reinvest their payouts in order to enjoy the benefits of compounding over time. Right investors will need to be aware that these investments are quite different from a savings account or a CD. REITs are sensitive to fluctuations in interest rates, which affect the real estate market disproportionately compared to other assets. And unlike very safe bank products, the price of REITs can move up and down a lot over time. Remember, investing is a journey, and it's essential to do your research and seek guidance from financial advisors if needed. Education and knowledge are powerful tools on the path to financial success. So, whether you're just starting out or well on your way to financial independence, embracing the power of compound interest can be a game changer. It's an opportunity to multiply your money and grow rich. Remember, every dollar you invest today has the potential to grow into a fortune tomorrow. Thank you for joining me on this exciting journey to uncover the power of compound interest. Don't forget to like, subscribe, and share this video with your friends and family.